Hello, good morning, ladies and gentlemen. Welcome to another new week. And I hope we are prepared for the new week. So let's quickly do this. If you can see my screen and you can hear my voice clearly, I will be glad that you type in hi in the comment section so that we can get the session started. So I would like to see some feedbacks in the comment section to confirm that we are good to go. All right, so I will be loading up my comment section in a moment. Okay, so what do we have here? All right, good morning, Star Baby. Good morning. Lara C, thank you very much for that confirmation. Vivi, good morning to you. Santos, good morning. How are you today? Sayor Cree, okay, thank you. 079, good, thank you very much. Egg Harry, good morning to you. Thank you for that confirmation. So I think we are good to go this morning. I'm so excited to welcome you to another promising session on the Extreme Speed. My name is Sheriff Daramola, and as sorry, I had a slip in my mic. So, like I was saying, my name is Sheriff Daramola, and I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters and then understanding the price action, the psychology of the market, to identify trading opportunities lining up for us during the New York session today. Well, since this is going to be the first day of the trading week, we are going to be beginning with some random pairs that we shall be choosing from our watch list to start doing some monitoring as the week begins for today. And what this simply means is that if you have any pairs, commodity, cryptocurrency, or options you want us to be looking at, this is a very good time for you to drop them in the comment section so that we can incorporate it into our plans for today. And one interesting thing about it is that once we have incorporated it into our watch list, this is going to be the pair we are going to be monitoring throughout the week. So if you have any instrument you want us to be looking at, feel free to drop it in the comment section while I try to incorporate it into my plans for the week. So I actually have some random pairs which I have been monitoring since the beginning of the week, so I will be sharing them with you, and by the end of the session you will be capable and independent enough to take your individual decision during the New York session today. So my advice is that you stay tuned in so that you don't miss out on any of these ideas, opportunities, and options we have on all of the pairs we shall be reviewing for today. So with that being said, we shall be going right into the economic calendar, as there are a lot of macroeconomic events for today. In fact, the week is jam-packed with high impact macroeconomic event, which is definitely going to be serving as fresh impetus for price action for this week. And what we have here, if we look at what we have here, considering the list of pairs I will be choosing for us for today, we have the gross domestic GDP product for the euro, which has already happened, and what we have here, doesn't seem quite good as compared to the previous one. We have minus 0.2%, which is about minus 0.9 deviation from the previous consensus. So it's not quite so good for the euro. So we are going to be looking at how this is going to be affecting price action on the euro pairs we are going to be monitoring for today. Then we also have the retail sales, which is coming up tomorrow. We have the bank lending survey for the euro as well, which is also coming up tomorrow. Then we have the harmonized index of consumer prices. That's for the Germany. That was for tomorrow too as well. Then on Wednesday, we have the core harmonized index of consumer prices. So we're having some positivity in the air here. If we compare what the consensus are saying, we have a 5.4% data for the consensus as against the previous data of 5.2. So there is, let's see what is going to be happening tomorrow. Then we also have the US ADP employment change for the US dollar, the highest in manufacturing PMI. This is on Wednesday. We have the Fed interest rate decision, monetary policy statement, and the FOMC press conference. So that day is really jam-packed with high impact event. Then on Thursday, we have series of events for the pounds. I think we have pounds on my watch list, and we are going to be looking forward to this event too as well. We have the Bank of England's minutes. We have the monetary policy report. We have the asset purchase facility. Then there is the interest rate decision, MPC vote rate cut, vote rate hike, vote rate on change, and the monetary policy summary. Then it will be capped with the Bank of England's governor's speech. Then on that same day too, we have some other high impact event for the euro, like the monetary policy decision statement, the rate on the deposit facility, rate on main refinancing operations, and then the press conference too, also for that same day. Then on Friday, we have the almighty non-farm payroll, which is another high impact event that majority in the market will be looking forward to, and we shall definitely be seeing the anticipation of this event reflect on the chart as price action. So with this highlight that we have here, let's dive into the chart and let's see things from a technical standpoint and use the technical structures we are able to identify to guide our trading activities for this week. So as usual, the first commodity we are going to be taking this morning is the US oil. And we are going to be starting from the daily time frame, where we want to be having an holistic view into what is really going on in this market. Now, if we look at what we have here on the daily time frame and taking into consideration what has been happening here in the last 6 to 7 months, you would observe that price action has been on a bearish momentum. And as a result of this, if we connect the series of lower highs here that you can see on my screen right now, we will have that resultant bearish trend line that has been guiding bearish momentum since the month of June last year. However, if we look at the structure here since the beginning of the year, you will observe that the $80 level has been a major determinant of price action, and in fact it has been a strong selling niche in the last couple of months. As you can see here in the month of November, we can see what happened, selling pressure from that structure. The same thing happened here on the first day of the month of December. We saw selling pressure coming in from that level. And in fact, at that same area, price action closed there at the end of last year. And at the beginning of this year, we saw a huge engulfing candle taking us out of that structure to further emphasize the strength of the sellers at this point. Though we had the breakout of the structure here a couple of weeks ago, we saw the breakout of both the $80 level and the bearish trend line that has been holding bearish momentum for the last 6 months to the upside. However, one interesting thing that happened since the breakout of that $80 level and the bearish trend line is the fact that price action was caught within a consolidation phase, as you can see here, between the $78 level and the $82.50 level, to further emphasize that there is a level of indecision in this market. And one thing about this kind of structure is the fact that there is no much liquidity in the market, as major key players in the market probably have stepped aside, looking out for a major catalyst that will drive the psychology of the markets to bring some liquidity. And now, one thing we should also take note of is the OPEC Plus meeting that will be coming up on the 1st of February. 1st of February, that's on, let's see, what day is that? 1st of February is on, that's on Wednesday. So we shall be looking forward to that. They are going to be making a decision on their production target for the year, and this is definitely going to be bringing some liquidity into the market. And we can see the anticipation for this event already reflecting on the charts in the last couple of weeks now. As you can see, the consolidation phase we have been witnessing here. Remember, prior to this consolidation phase, we initially identified a reversal pattern in the form of a double bottom structure here, where we used the $80 level as the neckline of that reversal pattern, and we were actually expecting a breakout of the $80 level to the upside to give us a beautiful signal of a bullish momentum. But with the way things are going here in the last couple of weeks now, it appears that things might not go like that as expected, as we continue to see selling pressure around the $82.50 level, negating all attempt by the buyers to break out of that structure to incite a wave of bullish momentum. So in this regard now, what we are going to be doing to make a decision for today is to understand what is really going on around here. As you can see, price action is currently trading somewhere around the $80 level, and we want to see how participants in this market has been reacting to the structure since the beginning of this week to decide what our next line of action will be. So in order to have a better perspective into what is really going on around the $80 level, we will be scaling down to a much lower time frame to see things more clearly. And if we scale further down to, let's say, the 4 hours time frame, first of all, it becomes clear that price action has been a choppy situation since the month of November, as price action is caught within a channel where the resistance point falls around the $82.50 level, as you can see here. And then we have the support level of the channel falling around the $72-73 area. And as you can see, every time price comes into the $82.50 level, we have been seeing selling pressure, negating all attempt by the buyers to break out of that structure. It happened here in the month of November. We saw that happen here again in the month of December. Then we saw since then price has been unable to break out of that structure. We saw some happen last week. It continues to see selling pressure. In fact, on the last day of last week trading session, we saw another selling pressure below the $82.50. So going into the week now, is price going to continue to the downside back into the $73 level where we have a strong demand zone? That is one question we want to be asking ourselves. And if that is going to be happening, remember throughout last week trading session, sellers were unable to break down the $78 area here, which has been a strong demand zone. And if we are really going to be selling the US oil this week, we need to see a good sign, a good signal to confirm that selling momentum has come to stay here. And this might likely lead to a breakdown of that demand zone at the $78 level, further giving us a confirmation after price action takes out all the buy positions here to incite another wave of bearish momentum to the downside. So to make things clear now, like I said, on the daily time frame, we need to scale down to the 1 hour time frame to see how price action has been reacting to the $80 level, which is serving as our major key level, at least for this week. And when I scale down to the 1 hour time frame, this is the 1 hour time frame here, we can see that the week started with a bullish gap here. As you can see, last week trading session ended at around the $79.50 level here, but when price opened this week, it opened around the $80.50 area. So we had a huge gap of about, a small gap of about $1 gap here. And as soon as price opened at the $80.50 level, we saw that it was a bearish momentum that took this market coming back into the $79 level, after which we started seeing some buy pressure around that area to possibly give us a support level for this week. So right now we have a beautiful channel around the $80.50 level, which at this point will be serving as the resistance point for this week at this point. Then we have the support level sitting around the $79 area to be our support level for this week. Now, whenever we have a channel like this, what we want to be looking out for is a signal to take advantage of any trading opportunity. So at this point, patience is hereby required, as we need to see a breakout or a breakdown of this channel to give us an opportunity to buy. So thinking of buying the US oil right now, breakout of the $80.50 level would likely be a good opportunity to buy at this point. And if price action breaks down the $79 level here, followed by selling pressure below the structure, we might likely be thinking of selling opportunities. Now, looking at what has happened here, and as soon as price tested the $79 level, we have been witnessing buy pressure around this area in the last 4 to 5 hours. And considering the fact that price action is right above a strong demand zone, remember throughout last week, the $78 level has been serving as a buying niche for participants in this market, as every attempt by the sellers to break down the structure has been met with resistance from the buyers. And the same thing appeared to be happening here as price action finds a higher low, as price action continued to reject the $79 level, which is simply above that demand zone at this point. And for me, I'm very suspicious that we might likely see a bullish momentum that will lead to the breakout of the $80.50 level in the nearest future. And if that is going to be happening, are we going to wait until the breakout happens before we join the rally to the upside? That will take a long time, and we might likely miss about over 100 pips if that will happen. So what we want to be doing is to position ourselves so that we can catch that move very early. So what I'll be doing now is to scale down to a much lower time frame where we want to see what structure price action has evolved into right above the $79 level, to see if the structure will be supporting a bullish momentum. So in that regard, I will be scaling down to, let's say, the 15 minutes time frame, or probably the 5 minutes time frame. And I did that this morning, which I shared on my public platform, and I would like to show you what I was able to identify here. Hold on a second, I saw something. All right, okay, so here we go. So I saw this on the 5 minutes time frame. This was a simple setup I was able to identify on the 5 minutes time frame. And what I noticed was that as soon as price got into the $78.80 level, we begin to see some buy pressure resume around this area. And from a technical standpoint, if we look at this closely following that impulsive bearish move to the downside this week, I want to see this as a reversal pattern, which is more or less like a double bottom structure, probably a head and shoulder pattern. And whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which shall be the basis for the trading opportunity going forward. And lucky enough, we have a neckline sitting around the $79 level here, where a breakout retest of that structure will be giving us a beautiful confirmation to join the rally to the upside. And this is exactly what has happened here in the last 1 hour, as we saw the breakout of the $79 level, giving us a beautiful signal, and price action has come back to do a retest of the structure. And in fact, we have been witnessing sharp rejection of the $79 level in the last 10 to 15 minutes now. So I want us to be positioning ourselves somewhere right above the $79.30 area to join this rally to the upside. So for me at this point, I will be looking at a position right above the $79.40 level to buy the US oil here, and a stop loss sitting somewhere right below the neckline or somewhere below the previous structure, and we continue to ride the move all the way up to the upside. And if a further if a further breakout of the $79.50 level happens here, we'll definitely be thinking of adding more position to our existing trade on the US oil. So these are my views here for any buying opportunity here on the US oil for today. So let's be on standby to catch that move when it finally happens. In as much as we are looking forward to buying momentum here on the US oil, we should also keep our mind open for the possibilities that sellers might likely come in. And in that regard, let us look out for structures which will signal to us that sellers are gradually coming in this market. And based on this current structure here, we would not be looking forward to any selling opportunity unless price action takes out this demand zone here, breaking down that structure to the downside, followed by selling pressure below that structure on our lower time frame will definitely be a good opportunity to join a sell position. So what we are going to be seeing is price breaking down the $78.70 level. This is the lowest point price has been for this week. So we want to see price break down that structure, and if possible, we have selling pressure below this level on our lower time frame. Then we could join that decline to the downside. So let's keep our mind open on this one. Despite the fact that we are looking out for buying opportunities here, we should keep the option of a possible bearish momentum open to as well. So we already have a demand zone at the $78.70 level. A breakdown of that structure will definitely be giving us an opportunity to join a decline at this point. So these are my views here on the US oil. If you have any questions, feel free to drop your inquiries in the comment section as we get ourselves prepared for the New York session. So that is what we are looking forward to here. So let's be on standby to catch that move when it finally happens. So I will be taking the next 10 to 15 seconds to read through the chats and see if there are any questions before we move on to the next pair. So what do we have right here in the comment section? All right, 790, good morning to you. Thank you. Okay, good morning, Susie MB 256, Agaris, and Victor Jedula, Fanusi. All right, that's beautiful. So I want to take this as a confirmation that we're on the same page here. Since there are no questions, we'll be moving on to the next option. So the next option we are going to be looking at this morning is the US Tech. And what do we have here on the US Tech? Well, I already have a position triggered at the breakdown of the $12,100 level here as price action breakdown, a major support level which I was able to identify at the beginning of today's session. Well, before we go into the details into what our plans are, I think we should just scale up to the daily time frame, have an holistic view of what is going on, and have a peep into why I have decided to sell the US Tech this morning. And then we will also look out for opportunities, if you had missed this one, to join this decline if this is how the week is going to be starting. So moving to the daily time frame here, what is the first thing we observed on the daily time frame? So here on the daily time frame, it is very obvious that price action has been bearish, and in fact throughout the course of last year's trading session, we saw a situation where price continued to find lower lows and lower highs. And if we connect the series of lower lows and lower highs here, we have this resultant bearish trend line which has been guiding bearish momentum throughout the course of last year's trading session. Now, at the beginning of this year, we identified two key levels which we said we shall be using to guide trading activity. And the first one is the $11,000 level here, which has been a level that has been known for a buying niche for participants in this market. In fact, if we go to as far back as the month of June, we saw how the $11,000 area has been a strong buying niche. The same thing happened here in the month of September stroke October. We saw buying pressure from that level, and one thing we noticed is that even though we had buying pressure there, we we saw that sellers negated all attempt by the buyers to break out of the 11,700. So the 11,700 became our second key level for selling opportunities. Now, since the beginning of the year, we had joined this bullish momentum to the upside, and in fact, this bullish momentum did a final breakout of that bearish trend line, which has been holding bearish momentum since last year. Remember, breaking out of the $11,700 level, which has been a strong selling niche in this market to signal a possible strength in the bullish momentum at this point. And from a technical standpoint, whenever we have a breakout of a structure, there is a likelihood that price will retest the structure to incite another wave of bullish momentum. And one thing we have been witnessing here since last week is the fact that price is currently around the $12,100 level. And remember, we had a channel here during the later part of last year. We saw a channel between the 12,100. So you can see the 12,100 as a memory for selling power, as every attempt by the buyers to break out of the $12,100 level, we have been witnessing selling pressure from that area. In fact, we have a selling pressure here in the month of December, which shares a confluence with that bearish trend line. And right now, price is right back into the 12,100, which makes this current structure a critical point at this time. So we really need to understand what is really going on around the $12,100 level to decide what our next line of action will be. So if selling pressure resumes below the 12,100 despite this bullish momentum we have been witnessing here since the beginning of the year, we might likely see a situation where price comes back to do a retest of that trend line, the line which also shares a confluence with that $11,500 level, which at one point has been a strong buying niche. So that is one scenario we want to be looking out for this week. Another possible setup that could happen here is if the currents trading around the $12,100 level here transitions into a trend continuation pattern where it leads to the breakout of the $12,100 level, then we might likely see a buying opportunity on this one. So what we are going to be doing now is to scale down to the 1 hour time frame, where we begin to see things clearly by looking out for our price action has been reacting to the 12,100 since the beginning of this week. So scaling down to the 1 hour time frame, we want to see how participants in this market has been reacting to the 12,100. So the first thing we are going to be doing now is to, okay, so we saw the $12,100 level here. So on the lower time frame, we saw our price has gone to as far as the $12,250 level. And then at the beginning of this week, the week started on a bearish note as we saw how the 12,200 became the resistance point for this week. Then we had some buying pressure around the $12,100 level before this final breakdown of the structure happened 3 to 4 hours ago. And I told you earlier that I took advantage of the sell opportunity here as price action broke down to 12,100. And for those who are taking advantage of that opportunity, kudos to you for being on standby. However, those who are not yet in this trade, well, let's see if the market will be presenting us with another opportunity to join a decline if this is going to be the case for this week. So if we are going to be looking out for opportunities to join a decline, that is those who are not yet in this trade, what we are going to be doing right now is to look out for a retest of the 12,100, selling pressure below this level, then we could join that decline to the downside. You know, from a technical standpoint, whenever we have a breakdown of a structure, we expect that a retest will be inciting another wave in the direction of the breakdown. So what we are going to be looking forward to here, for those who are not yet in this trade, is to see if the market is going to do a retest of the 12,100. So somewhere around here, we should have our sell limit. around the 12,100 or the 12,150 area, because price might likely push further to the upside a little bit before we start seeing some selling pressure that will incite that bearish momentum to the downside. And if that is going to be the case here, where will our take profit target be? That is, if selling momentum will be the case for this week, where will our take profit target be? Well, in the meantime, if we look at what has been happening here since the beginning of this year, we have noticed that price action has been bullish. That is one scenario. And if we take into consideration the higher lows we have here, I already have a bullish trend line which has been guiding bullish momentum since the beginning of the year. And if we look at the structure here, it shares a confluence with the $11,900 level. Now, how important is the 11,900 with this current structure? Now, look at what happened here on the 23rd of January. That was last week, at the beginning of last week's trading session. We saw how the 11,900 has been a strong selling niche in this market. Every attempt by the buyers to break out of that structure was initially rejected, and this lasted for about 4 days before we finally saw the breakout of the 11,900. On Thursday stroke Friday, we saw the breakout of that structure. And from a technical standpoint, whenever we have a breakout of a structure, we expect that price is likely going to come back and do a retest of that level, which will be inciting another wave of bullish momentum. So the position we are in right now is more or less a counter trend opportunity, and for the meantime, if price action continues to the downside, that is, if it does a retest and continues to the downside, as soon as it tests the 11,900, a level which shares a confluence with that bullish trend line, we want to be moving our stop loss to accordingly to lock in some profit. It could be around the $12,000 level. Lock in some profit, and let's wait out and see how price action will be reacting to the structure to decide if we are going to be adding more position to our existing trade, or we shall be getting ready to join another wave of bullish momentum. So what we are going to be looking forward to add more position is if price breaks down the bullish trend line and 11,900 with selling pressure below the structure on our lower time frame, then we could join or add more position to our existing trade. However, if we start seeing buy pressure right above this bullish trend line on our lower time frame, probably evolving into a double bottom structure, for instance, breakout retest on our lower time frame, it will be a very good opportunity to join a rally to the upside. And a further breakout of the 12,200 at any point in time will definitely be welcoming additional position to our existing trade. So this is what we shall be looking out for the US tech for this week. I hope you munch my screen so that you can use it as a reference point when you are about to make your individual decision on the US tech. So it's quite a simple setup we have here. So I hope that we'll be on standby to catch either of these opportunities when they finally happen. Then there is one thing I would like to state here as well. If price does not continue to the downside as expected, and instead it continues to find higher highs and higher lows, then a breakout of the $12,200 level will be a good opportunity to join a rally to the upside. So my advice is that we remain patient here and look out for all these opportunities to be able to take advantage of these moves when they finally happen. So if you really have any questions regarding what I just explained so far, feel free to drop your inquiries right in the comment section, and be rest assured that I will be of help in that regard. So we shall be moving on to the next pair. If you have questions, feel free to drop your inquiries. I will be checking the comment section from time to time. So the next pair we are going to be looking at this morning is the GBPUSD. And on the GBPUSD, I already have a buy position triggered, but I will be showing you what led to that decision at this point. So in that regard, we shall be scaling up to the daily time frame here. And on the daily time frame, we have it's a simple setup we have here, and the setup revolves around a bullish momentum. It's quite simple. Since the month of September here, we have had the bullish momentum as price action has continued to find higher lows. And if we connect the series of higher lows here, we have this beautiful bullish trend line which price has consistently respected in the last 3 to 4 months. And in fact, at the beginning of the year, remember we had this demand zone at the 1.19 level, a zone which also shares a beautiful confluence with that bullish trend line, and we saw this engulfing candle striking out of that structure, breaking out of the 1.200 level, key level, to push price to the upside. And since then, price has continued to find higher highs and higher lows. However, there is another key level here which is something we also need to take into consideration while we're trying to make out a trading opportunity on the GBPUSD, and that is the 1.24500 level. And what is it about the structure? If we go to as far back as the month of May, we can see how this level also has been a major determinant of price action. In fact, it was once a buying niche, but it wasn't strong. You can see every buying attempt around that area was so weak that sellers had to take out all the buy position to incite a bearish momentum. And as you can see, you saw selling pressure, which led to the final breakdown of the structure here in the month of June. And since then, price has been trading below the 1.24500 level to further emphasize the strength of the sellers at this point. Though we had bullish momentum the last 3 to 4 months, but one thing we noticed that as soon as price got into this level again in the month of December, we saw another engulfing bearish candle taking us out of that structure, further emphasizing how strong the sellers are at this point. And in the last couple of weeks now, we have been witnessing selling pressure from that level, rejecting all attempt by the buyers to break out of that structure. So we are at a very critical point in time. Despite the strong bullish momentum since the beginning of this year, we have seen how the sellers have been negating all attempt by the buyers to break out of that structure. But I'm of the opinion that we might likely see a breakout of that structure, and if a breakout of the structure happens, it's going to be very, very massive. As you know, it has been a while since buyers have been knocking this level to incite a bullish momentum. For the past 6 to 7 months, buyers have been knocking the ceiling, have this resistance point to break out of that structure. And if a breakout happens this week, I am of the opinion that we might be having a massive bullish momentum at this point. So we shall be looking forward to this opportunity to buy if a breakout of the 1.245 level happens. And if we are going to be looking out for selling opportunities, considering the memory for selling power around the 1.245, which we have seen in the last 6 to 7 months, I am of the opinion that we might want to see price break down this bullish trend line, which also shares a confluence with the structure at the 1.22500 level, to give us a signal that that bullish trend line no longer have the capacity to hold bullish momentum anymore. And if the breakdown of this level happen, and if it is followed with selling pressure below the structure, it will be another opportunity to add more position to our existing trade. So let's scale down to a much lower time frame at this point. Let's see how price action has been reacting right under the 1.245 level since the beginning of this week, to decide if we are really going to be buying or we are going to be getting ready to join a sell-off. So in that regard, we shall be scaling down to the 1 hour time frame at this point to prepare ourselves for the New York session today. Now, scaling down to the 1 hour time frame here, this is what I was able to identify. So I think I would look at the 4 hours time frame first, so that I can give you a little bit spice to what is evolving on the much lower time frame here. So since the beginning of the year, we have this bullish trend line, which price action has been respecting. So we have a bullish trend line. As you can see, price has continued to trade right above that trend line since the beginning of the year. And one thing about this structure is that as soon as price got into the 1.245 level, that was a couple of weeks ago, we have a supply zone around that area. As you can see here, it's more clearer here on the 4 hours time frame. As soon as price gets into this level, we have been witnessing selling pressure from that area. So in as much as the bullish trend line is here and we want to be joining a bullish trend continuation, we need to be very cautious of the fact that between the 1.240 level and the 1.245 is a strong selling niche, at least in the last 2 weeks. And in fact, in the last 6 to 7 months, which I showed you on the daily time frame. And at this point, if we look at what has been happening since the beginning of the week, price has just rejected that bullish trend line, giving us a sign that the bullish trend line still has the potential of a bullish momentum. And now, if this continues to the upside, we might likely be seeing an opportunity to buy if a breakout, which might lead to the breakout of the 1.245, giving us an opportunity to buy the GBPUSD. And to make things easy for us during the trading session for this week, I was able to connect the series of lower highs here within the supply zone to identify a bearish trend line, which we can also use to guide trading activity. So this trend line can either support us to join selling momentum if this leads to the further breakdown of that bullish trend line to send price crashing to the downside, and it could also help us in identifying buying opportunity if price breaks out of the structure, retests that level for buying pressure on our lower time frame, then we could join the rally to the upside. So this is how we are going to be using this trend line for this week. So now we can now scale down to a 1 hour time frame, and let's see how price action has been reacting to the 1.2400 level since the beginning of this week. So here we are right now on the 1 hour time frame, and since the beginning of this week, price has been caught within a channel. In fact, it has been an indecisive situation here, as we have the 1.2400 level as the resistance point for this week, and then we have the support level at the 1.23800, a support level which also shares a beautiful confluence with that bullish trend line. And what we saw here in the last 2 hours was an engulfing candle striking right out of the 1.23800, which also has a confluence with that bullish trend line to signify that the strength of the buyers here cannot be ignored at this point. And you know, whenever we have a channel like this, what we want to be doing is to remain patient and wait out for either a breakout of the channel to give us an opportunity to buy, or a breakdown of this channel to give us an opportunity to sell. And if you look at this, a breakdown of this channel breaks down that bullish trend line, and that will be a beautiful signal that this trend line no longer have the capacity to hold bullish momentum. So now, with a breakout of the 1.2400 level, I already have a buy position triggered at this point. And one thing about the buy position around this area is that we need to be very, very careful at this point. So we can have a stop loss of about 40 pips there, about giving room for price action to breathe. And the reason why I said we need to be very cautious is because we are still within a strong supply zone, which has been evident in the last 2 to 3 weeks now. So if price continues to climb to the upside here, we will continue to move our stop loss accordingly to protect our position against any sudden pullback that might likely happen here, considering the strength of the sellers around the 1.24 level and the 1.245. Now, if this bullish momentum continues to the upside in such a way that it breaks out of the 1.24500 level, it will be at this point, a breakout of the 1.24500 level is going to be a huge signal for me to join this bullish momentum with more confidence, as a breakout of the 1.245 is just a signal that price action has taken out all the sellers at this point to incite another wave of bullish momentum. So this is what we are going to be looking forward to for this week on the GBPUSD. As long as we continue to see price trade above both the bullish trend line here and the 1.2400 level, we continue to look out for buying opportunity above this structure. And if price breaks down the structure, that is, breaks down the 1.23800 level, breaking down that bearish bullish trend line, then we will be seeing that as a strong signal to sell the GBPUSD. So this is what we shall be looking forward to on the GBPUSD for this week. So let's be on standby to catch these moves when they finally happen. And you can also screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next pair. So I can see Hi Max here. Good morning, Hi Max. Glad to have you around. Hemithan, Sajino, good morning. 8307, Ramo 50, okay. 466 603, good morning to you. How are you doing today? 645, okay. All right, so in the absence of no questions, I will assume that we are good to go. We're on the same page here. So I will be moving on to the next pair. So the next pair we are going to be looking at this morning, it's going to be the XAUUSD. Let's look at the XAUUSD before we move on to the EURJPY. I want us to look at the EURJPY together this morning. So on the XAUUSD, scaling up to the daily time frame here, the first thing we observed on the daily time frame is the fact that since the beginning of this year, price action has been very, very bullish. Remember, towards the end of last year, we saw the $1,820 level serving as a strong resistance level as sellers continue to negate all attempt by the buyers to break out of that structure. And at the beginning of this year, we finally saw the breakout retest of the 1,820 to become a platform for a bullish momentum. And since the beginning of the year, price action has continued to find higher highs, breaking out of structures like the 1,860, breaking out of structures like the 1,900. Now it gets interesting in the last 2 weeks now. As we saw after the breakout of the 1,900, what we saw here was a consolidation between the 1,940, which is the resistance point of this channel, and the $1,900 level, which is the support level of this channel. And in addition to this channel here between the 1,940 and the 1,900 is this bullish trend line, which I was able to identify here. And throughout the course of the last 2 weeks now, price action has been trading above that trend line to further emphasize the strength of the buyers rather. And you know, from a technical standpoint, whenever we have a flat channel like this, it is very likely to transition into a trend continuation pattern, like a bullish rectangle pattern, if we take into consideration this bullish move. And this might lead to a breakout of the 1,940 to give us a signal of a trend continuation to the upside. And in fact, during the course of last week's trading session, we saw attempt by the buyers to break out of the structure. And that was on Wednesday last week. We saw a breakout of structure, though price came back, dropped back to the downside with an engulfing candle. But one thing we noticed within this channel is the $1,922 level, which has been a strong buying niche. Even though we have been witnessing rejection of the 1,940 throughout the course of last week, we saw that the $1,922 level had continued to negate all selling pressure. So this level at this point is more or less a beautiful demand zone that might likely continue to hold bullish momentum. And if you look at it, that's 1922, it also shares a confluence with this bullish trend line that we have here. So at this point, I'm having a buy stop order right above the 1940 to join a possible trend continuation to the upside if this trend line and the $1922 level continue to hold bullish momentum to the upside. However, if a breakdown of both the structure happen anytime this week, this might likely be a signal that sellers are gradually coming in. And in fact, if we look at the structure from the beginning of this year, you would agree that a retracement phase is long overdue. And you know, for those who are taking advantage of this bullish momentum right above the 1820, at one point in time there will be some profit taking activities which will be reflected on the chart as a retracement phase of the previous impulse leg in anticipation of another wave of bullish momentum. So if this is going to turn out to be a retracement, that is price dropping to the downside due to profit taking activities, then a breakdown of both this bullish trend line and the $1922 level should be signaling an opportunity to join a decline. And if selling pressure resumes below the structure, we shall be selling, and a further breakdown of the 1900 will be welcoming additional position to our existing trade. So this is what we are going to be looking forward to sell, and a breakout of the 1940 will be an opportunity to buy. However, before we jump into conclusion at this point, let's scale down to the lower time frame and let's see how price action has been reacting to the $1922 level since the beginning of this week. And remember how that level is sharing a confluence with that trend line, so it is a very critical point we are in right now. So scaling down to the 1 hour time frame, what can we see on the 1 hour time frame? And let's see how price action has been reacting to that structure since the beginning of this week. So now we are on the 1 hour time frame here, and on the 1 hour time frame we have observed that price action has been caught within a channel. We have the resistance point for this week around the 1935 and the support level for this week around the $1925 level here. And in that regard, we shall be looking forward to a signal in the form of a breakdown or breakout of that channel. And for me at this point, I'm tending towards a bullish momentum, considering the fact that we have a huge demand zone here. Throughout last week trading session, price was unable to break below this demand zone at the $1920 level to further emphasize the strength of the buyers at this juncture in this market. So the only reason why I will be selling the XAUUSD, even if price breaks down this 1925, I will be very conscious. I could take some position with some probably half of my normal position size at the breakdown of the 1925, but a significant breakdown of the 1920 will be a beautiful signal to join a decline to the downside. But as long as price continue to respect the 1925 and this bullish trend line here, followed by bullish momentum above the structure, it's a very good opportunity to join a bullish momentum at this point. So if you had bought above the 1925 at this point, that's a very good opportunity that you have taken. Well done, kudos to you. And if you had missed this buy opportunity above the $1925 level, then I will be advising you to remain patient and wait out for a breakout of the structure here to be thinking of looking out for another buy position on the XAUUSD. So we just have a simple setup here between the 1925 and the 1935. So if you had bought above the 1925, it's okay, you're on point. Then you look out for additional position at the breakout of either the 1932 and the $1935 level to join or add more position to our existing trade. And the 1949 level is another area we need to take into consideration as well as we continue to monitor price action. A breakout of the $1949 level with buy pressure above that structure will welcome additional position. And if price action resumes selling pressure below the 1949, you might want to take advantage of a counter trend opportunity back into this trend line, or the key structure at the 1935 in anticipation of another wave of bullish momentum. So till then, we continue to monitor price action. Let's use this structure here as a yardstick for trading activities for today. So that is that on the XAUUSD. If you have any questions, feel free to drop your inquiries in the comment section. So moving on right now, we shall be closing the day with the EURJPY. I'm already out of time, but I can quickly squeeze this in to our trading plan for this week. So on the EURJPY, on the daily time frame, I will just run through what has been happening since the beginning of this year so that I can finish right on time. So since the beginning of the year, price action has been caught within the channel between the 143.00 level and the 138.00 area. So this is where we have been since the beginning of the year. And following this engulfing candle that broke down the 143 to the downside, we have continued to see selling pressure right below the 143.00 level to emphasize the strength of the sellers at those points in the market. And one thing that makes the selling pressure around the 143 more interesting is that I have noticed that selling pressure comes in every Wednesday of the week. That's midweek. So if you look at this, if you look at what happened on the 28th of December, it's a Wednesday. We saw selling pressure from that level. And the same thing happened here on Wednesday. We have selling pressure on the 11th of January from that level. And last week, price was unable to come into the 143 for that selling pressure that is being characterized with a structure, to further emphasize that sellers are likely coming in at this point, as buyers were unable to test the 143 throughout the course of last week's trading session. So this gave me a sign that we might likely see some selling opportunities this week. But the fact that I continue to see buy pressure around the 138.00 level made me not to jump into conclusion of selling the EURJPY outrightly. So we really need to understand what has really been going on around here to decipher what our next line of action will be. So in that regard, what I did was to scale down to my lower time frame, like the 4 hours time frame, to identify what has really been going on around here, at least throughout the course of last week's trading session. And when I scaled down to the 4 hours time frame, this is what I found. On the 4 hours time frame, throughout the course of last week's trading session, this is what we saw. We saw another consolidation phase around the 142.00 level. That was a resistance point for last week's trading session. And then we saw the support level for last week's trading session at around the 141.00 area. And one thing about the structure is the fact that during the later part of last week, buyers were unable to test the 142 level. As you can see, we have a trend line, a temporary trend line here, which has been finding, if we connect this series of lower highs here, we have that trend line going to the downside. And one thing about this structure is that throughout the course of on Friday last week, we saw a little sign that sellers might likely break down the 141.00 level. We saw the same thing happen this morning, as we saw a little breakdown of the 141.00 level again before this engulfing candle took price out of that structure. So what we are going to be doing now is to see what has been happening since the beginning of this week around the structure to decide what our next line of action will be. Will this channel here turn out to be a trend continuation pattern, that is to the upside, or is it going to turn out to be a reversal pattern where a breakdown of the 141.00 level will incite a bearish momentum? And if a breakout of the 142.00 level happens, we might be looking out for buying opportunity. So let's scale down to the much lower time frame, like the 1 hour time frame, where we'll begin to see things more clearly at this point. So this is what we have here on the 1 hour time frame, and remember that is the 141 level, which we identified earlier on the 4 hours time frame. And one thing I noticed at the beginning of the week is that we have a support level and a resistance point. This is the resistance point for the week at the 141.600, and we have the support level for the week at the 140.800. So we see that as soon as price gets into the 141.600, we saw selling pressure negating all buying attempts. Then as soon as price got into the 140.800, we saw a buy pressure from that level, which took price out of the structure to the upside. So if you are taking advantage of the buy pressure here, well, you will have been in profit. Well done. But one thing about the structure is that as a trader in this community, what we look out for whenever we have a channel like this is to look out for a breakout or breakdown of that channel to give us an opportunity to either buy or sell. So what we are going to be looking forward to is either price breaks out of this channel to give us an opportunity to buy, or price breaks down this channel to give us an opportunity to sell. And what we have seen here in the last couple of hours is a breakout of this channel. And if you already have a buy position triggered at that point, that is a good opportunity to have joined there. Let's see how far this move is going to go. Are we going to see price continue to climb to the upside, breaking out of the 142.00 level for us to add more position to our existing trade? And if a further breakout of the 143.00 level happens, we want to be adding more position to our existing trade here. So for the New York session today, we continue to look out for buying opportunity right above the 141.600 as price action has broken out of the resistance point for this week, and at the same time the bearish trend line that we have here that has been guiding selling momentum since Wednesday of last week. So let's see how this plays out during the New York session, and definitely we shall be coming back here tomorrow to review how this trade has gone. So on this note, I want to be dropping the curtain here, but before I do, let's run through what we have been discussing here since the beginning of the session. For those who had missed out from the early session, let's run through so that we can all be on the same page here. So the first commodity we looked at this morning is the US oil, and I told you that buying above the $79 level was a very good scenario, and currently we are running in profit at this point as we have taken advantage of a buy opportunity at the site of buying pressure above the $79 level. And to further buttress the buying pressure we have observed around the $79 level here, I showed you something on the, was it on the 5 minutes time frame? Let's quickly run through that so that you can have a better perspective into what is really going on here. So this is what we saw on the 5 minutes time frame. I told you to put your buy stop above the $79.26, remember? And we got the position triggered right now, so you will definitely be in profit if you had set your buy stop around that area. So you have been in profit by now with about 50 pips in profit. So if you have been part of that trade, well done guys for being on standby to catch that move. And I also told you that a breakout retest of the $79.50 level should welcome additional position, and this is exactly what has happened now. So we have a second position running above the $79.50 level at this point. So at this point now, I would advise you to move your stop loss accordingly to lock in some profit right now, and I will be suggesting that you move your stop loss to somewhere around the $79.50 level, which is where your second position was triggered. And for those who had missed out on this opportunity, let's see if the market will be presenting us with another chance if price comes back to do a retest of the $79.50 level with buying pressure above that structure. Then you could add more position to our existing trade. So let's see how far this move is going to go as we continue to enjoy that bullish ride to the upside. So that is that on the US oil for today, and congratulations to those who are taking advantage of that buy position right there. And let's continue to see what is going to happen. Then we went on to talk about the US tech for today, and on the US tech I told you I have a sell position triggered below the $12,100 level, and those who took advantage of this move, kudos to you for being on standby to catch that move. And if you had missed out on that move, I have told you that let's remain patient. This could last about 4, 5, 6 hours before this happens. That a retest of the $12,100 level with selling pressure on our lower time frame should be a very good opportunity to add more position to our existing trade or join that decline if you are not yet in this trade. And there is a catch to the setup we have here, and that is the $11,900 level, a level which shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum in the last couple of weeks. And one thing I said about that structure is that remember that that level has been a strong selling niche in the past here, where sellers continue to reject buying attempt before it was finally broken during the later part of last week's trading session to the upside. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time price is likely going to come back into that structure, do a retest of that level, transition into a bullish momentum from that area. So because of this expectation right now, and since we're already in a sell position, I have told you that as soon as price gets into the structure here between the $11,960 and $11,900 level, move your stop loss accordingly to lock in some profit, as we don't want to get caught up in any sudden pullback that might likely happen from the structure. Remember, this is a long-term bullish momentum. We have a bullish trend line to emphasize the strength of the buyers at this point, so we might likely see some buy pressure come in from this area to incite another wave of bullish momentum. So we want to be preparing for that too as well. But if we have a situation where price breaks down the 11,900, breaking down that bullish trend line, then the bullish trend line here will be considered as having no capacity to continue to hold bullish momentum. If this transitions into selling pressure below the structure, we definitely want to be getting ready to add more position to our existing sell position on the US tech. So that is my view here on the US tech. And also one thing I stated here is that if the sell pressure does not continue to does not continue to the 11,900 level, but instead it continues to find higher highs, a breakout of the $12,200 level will be an opportunity to join a rally to the upside. So let's keep this also in mind as we continue to monitor price action on the US tech. Then we went on to talk about the GBPUSD for today, which I told you I have a buy position triggered already, and I told you that it's a risk worth taking considering the fact that we are within a supply zone which has been consistent in the last 1 week now. I guess 1 week we have been seeing selling pressure from that area, and taking into consideration this bullish trend line that has been guiding bullish momentum since the beginning of the year, with an engulfing candle striking right out of that structure, I am of the opinion that a bullish momentum is likely going to be coming in. So I told you I had a buy stop above the 1.2400 level, though I'm in a loss right now with about minus 3 pips thereabout, but I still continue to think that price will continue to the upside from this level. So I hope that things work out accordingly, and if a further breakout of the 1.24500 level, at this point I will be more comfortable in my buy position, as price action would have taken out all the sell position within the 1.245 level here to signal a strength for the buyers. So we continue to look out for buying opportunity on the GBPUSD for today. However, I stated something here about this current structure, and that is the 1.23800, which also shares a confluence with that bullish trend line. And one thing I stated about the structure is that if price action breaks down this trend line, break down the 1.23800, then this will be a good signal that the trend line is no longer strong enough to hold bullish momentum. And considering the fact that we are within a strong supply zone, which is a strong selling niche for participants in this market in the last couple of weeks, if selling pressure comes below the trend line here, it will be a good opportunity to join that decline to the downside. And a further breakdown of the 1.23400 will be welcoming additional position in that regard. So let's keep our options open on this one. So despite the fact that we are looking out for buying opportunities above the 1.2400 level, let's keep the option of a breakdown of the trend line open too for selling opportunities. If you have questions, feel free to drop your inquiries in the comment section. Okay, then we went on to talk about the XAUUSD for today, and on the XAUUSD I told you how we identified a channel between the 1925 and the 1935 this morning, as we had a little indecision in this market at this point. But the fact that price action showed some buying pressure around the 1925, a level which also shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of the year, and the fact that price is right above a strong demand zone, which has been a buying niche for participants in this market throughout the course of last week's trading session. I was of the opinion that buying above the 1925 is a very, very good opportunity. And for those who are taking advantage of that opportunity right above that structure, well done to you guys for being on standby. You might want to move your stop loss to break even at this point to protect your position against sudden pullback as we continue to monitor price action. Now, for those who had missed out on this opportunity, I have said that we are going to be looking out for another chance to join that rally if price action breaks out of the 1935 $1932 area. Then we look out for buying opportunity above that structure to add more position to our existing trade. Then we continue to guide our bullish momentum to the upside. Move your stop loss accordingly as price action continues to the upside. Now, the $1,949 level is a level which price, the highest point price has ever been this year, and that is the $1,949. We saw what happened here on Thursday last week. We saw selling pressure from that area pushing price to the downside. So if price gets into the structure here or at any point in time test the structure in our lower time frame, kindly move your stop loss accordingly to lock in some profit, as we want to remain patient and wait out to see how price action will be reacting to the 1949 level to decide if we are going to be adding more position to our buy position or we are going to be getting ready to join a decline from that point. So if price gets into the 1949, breaks out of that structure, buy pressure above that level, it will be a very good opportunity to buy, as price action has taken out the sell positions that we have here to gain some liquidity for more bullish momentum here. However, if price gets into the 1949 and as soon as we scale down to our lower time frame, it could be your 5 minutes, your 10 minutes time frame, and you start seeing sudden pressure below the structure, then you might want to be getting ready for a counter trend opportunity, probably to the 1935 level, which also shares a beautiful confluence with this bullish trend line. And this, if a retest of this level, will be inciting another wave of bullish momentum. So we want to be on standby to catch any of these moves when they happen. Please don't forget to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. Now, with the last pair we talked about today is the EURJPY, where I told you that we should be buying above the 141.600 as the position is already triggered at that point. That resistance point at the 141.600 also shares a beautiful confluence with this bearish trend line. So the breakout of that structure, as long as price remains above the 141.600, we want to be adding more position to our existing trade. There is a likelihood that price might likely come back at one point, probably selling pressure come in. Don't get too excited or nervous, as we might likely see a situation where price comes back to do a retest of that trend line, followed by buying pressure to continue that trend to the upside. So let us keep that in mind too as well. And if price continues to go to the upside, breaking out of the 142.00 level, we want to be adding more position to our existing trade. Now, looking out for selling opportunities on the EURJPY, I have told you that I wouldn't be thinking of selling the EURJPY unless I see a breakdown of the 141.00 level, where selling pressure resumes below the structure of my lower time frame. Then I will be joining that decline to the downside, and a further breakdown of the 140.800 level will be welcoming additional position to my existing trade. So these are my views here on the EURJPY for this week, and in fact we were able to treated the USOil, the US Tech, the GBPUSD, the XAUUSD, and the EURJPY. So in fact we have 5 opportunities to be looking out for, trading opportunities for this week. So we hope that things works out accordingly, and we shall continue to monitor these pairs as the week goes by. So I really appreciate your attention, everyone. Thank you for being around. I really appreciate it. And remember not to get too excited in your trades. This business is not about excitement. We don't want to get too excited, because excitement will make you go astray, and we don't want to go astray. So let's keep our mind focused on what our expectations are. We already simulated all the possible scenarios that might likely happen on all of the pairs we have reviewed. So let's ensure that we follow the simple instructions accordingly. Whenever we have a breakout of a structure, remember that it's just a signal. Scale down immediately to your lower time frame. It could be your 1 minute time frame, your 2 minutes, your 3 minutes, your 5 minutes time frame. Look out for retest of structure supporting the direction of the breakout. Then you could actually join that rally or decline, whichever case it may be. So I wish you best of luck during the New York session today, and thank you for being around. And this note, I wish you a wonderful and beautiful evening. Thank you, Miyagi. I saw your comments. It's my pleasure. All right, do have a wonderful evening, everyone. Bye bye.